What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as usual. Today we're going to talk about the Petty. This is Mogul's latest long-term rental. It is in Cape Coral, Florida. It's very close to the Buffett, which we looked at pretty recently. The Buffett is sold out already, I believe. Is that right? Yeah, already sold out. And so they launched a second one right away. It seems like, they have maybe have a couple others lined up. And so I'm going to talk about this property by comparing it to the Buffett. If you haven't watched that other video, it may be helpful. But so a couple of things right away. The yields are very similar, right? I think they're actually projecting slightly higher yields. Yeah, 10.1 versus 10. And what did they say there? And 11.2 versus 11.1 for IRR. So very, very similar. They're actually projecting slightly better numbers on this property. The income is less, but the purchase price is also less. 7.37% year one. What is that? Year one yield. And they're saying, it's the year one income that they underwrote is below the trailing 12 actuals. We didn't get an exact amount on that, but so they are trying to be conservative in this, is what it sounds like. And they also mentioned, they had the new roof and HVAC work completed in the last 4 years. One of the things, if you look in the Discord, Ike had put some links to where you can see some permits, and I think he's saying that the work was done more recently on this property than on the Buffett. I have to go back and check though. Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please be sure to do your own due diligence on all of those platforms and on any of the properties you see me talk about. Just because I buy something or don't buy something doesn't mean that it's the right answer for you. Also, in the description of this video, there's a link to the Discord that I just mentioned. There's a whole bunch of us talking about lots of different fractional real estate platforms. It's free. It's not a sales funnel. It's, you can just join, talk about stuff, be a lurker. Most people are lurkers, but I'd encourage you to get involved and actually talk to people. If you join it and then you get DMs from someone who looks like me, just make sure it is me, because I'm not DMing people trying to sell them anything at all. And so some people have actually been scammed, or at least approached by scammers. And so you want to make sure that that's not you. Okay, so back to this property. A couple of other things that make it different. This is two duplexes built side by side with this little piece connecting it. When I looked it up in the public records, they actually just show it as two duplexes. But on one lot. So it is just one single lot. It doesn't look like in the current configuration it could be sold as two duplexes. I wanted to make sure that was clear, because I've heard, or I saw some people talking about that's a possibility, which, I think you could do that sometime in the future, potentially. You'd have to subdivide it, or maybe separate them as, condominiumize them. But anyway, that's, I think, not something that anybody's talking about as far as Mogul goes. Let's see. What else do I want to talk about with this? So, if you want to hear my thoughts on this market, I mentioned it a little bit in the video on the Buffett. I think I'm not going to jump into that. As I've mentioned, I'm trying to do these due diligence ones a little bit quicker. I didn't even pull up a crime map. I think that you should do that. But I'm going to jump into a couple of things real quick. I did look at the FEMA flood map because, there are flood plains all over this area. And so I wanted to make sure that this looked good. One of the things that strikes me as very odd is how... So, okay, let's look at this. Let's get rid of the flood map. I'm going to close some stuff as we go. But so this is the subject property. This is the Buffett over here. They're extremely close to each other. This neighborhood's very dense where the Buffett is, and this neighborhood where the Petty is, it's barely, it's just really wide open, and that's strange to me. This property was built in 1986, so it's not as if it's like new construction that hasn't sold out. Oh, that's kind of funny. I didn't think about it when I mentioned 1986. Possibly, if you guys don't know your history of real estate, there was a tax reform that occurred in 1986 that really devastated real estate investors. I believe it was the 1986 tax reform, but it may not have gone into effect until the next year, or I could be off. It could have been 85 and then it went into effect in 86. But anyway, it really tanked the real estate market in a lot of different places. Possibly this subdivision was being built out at that time, and that's why it stopped. That's pure speculation on my part. I just happened to think about it because I was talking about, the year that this property was built. But it does seem really odd. You have, this is the subject property. You have one similar next to it. You have a couple other properties that look like they're also duplexes, but then you have these commercial properties. And one of the things I want to point out, it looks like you've got a lot of land here, but you don't actually. I mean, it's a third of an acre, but this is the parcel viewer on the county website. And so what we actually have is just this lot. I don't understand what's going on, if this is supposed to be an alley for some kind of future alley that's going to be built for like trash access or something. That's usually when you see this, but it doesn't look like it is now. But if that is the case, then I don't understand what they're doing here. This doesn't seem like they should have this stuff here. But so it looks like the lot right next to it could be sold and the land behind it. Some people were looking at the street view and thinking, wow, maybe we could build more. But no, we don't. All we own is, the only thing being purchased in this appears to be this right here, right? So it is a nice large lot, and that's why you can fit the two duplexes on it, but it is not it's not quite as vast as it looks in the pictures. With the existence of these smaller lots, though, behind it is what made me think that there's the potential in the future to cut it and sell it as separate duplexes. I don't know that, and sometimes it's not even worth it to do. It just depends on the market and what's selling well and whatnot. I'm just always thinking about like different ways that we can unlock some additional value from properties. But that's again just me speculating. I don't know that that's really that there'd be any upside right now in doing that. Oh, it was actually built 1984, but effective built 1986. Well, that's even weirder. I don't know what that means exactly. But you can see they describe it as two different buildings, which is interesting instead of just calling it a fourplex, because it is, from the pictures you can see the buildings are attached, which makes me think that at some point in time it was maybe easier to permit a fourplex than it was two duplexes or something like that. I don't know why else you'd build it in this manner, but I'm not sure. I don't know what's going on there. So in general, I did buy a piece of the Buffett, so I liked this market. I liked the long-term rental. In the spirit of continuing to compare them, what did we spend on the Buffett? We spent $635. This property is $602, but like I said, it is about 500 square feet smaller. A little more than 500 square feet smaller. So on a dollars per square foot basis, we're paying more for this property. In addition to that, we're not getting the garages, which aren't included in those square feet. So it seems like a worse deal from that perspective. At the same time, multifamily properties, they don't necessarily trade on square footage in the same way that single family homes do. And it's one of the reasons that I don't always trust like Zillow and Redfin and Realtor to give me a price for multifamily properties, because a lot of times, like me as an agent, when I'm helping clients find properties like this, we're looking for the gross rent multiple is the easiest way to compare properties, right? How much does that rent for compared to the purchase price? And this property is still 4 2-bedroom 2 baths, and apartment rents don't seem to, they're not as sensitive to square footage variation as when you're buying a home, which I mean, partially it's a little bit silly. I think the reason it's not so much is because you don't have that appraiser involved. A lot of times, you won't even know the size of your apartment, right? You just know you're looking for 2-bedroom 2 bath apartments in a certain area, and so it's understandable to me that you could get a similar rent here, even though it's a smaller unit. Especially if some people will prefer to live in half of a duplex versus living in a fourplex, and this kind of looks like that. At the same time, having the garage, I think, is a big deal. So I understand why it looks like, we're spending less on this. So from that perspective, it looks worse, but it seems like from a revenue to price standpoint, we're doing a little bit better. And actually, let's do the math on that. So what did they say? 75,000, because it does, the deal itself looks like it's a little bit better. Divided by what? 602.23. Okay, so 0.124, and then let's do it on the other one. And we did, what was our top line revenue on this one? 81. It seems like this is actually going to be better. 81, 123, 635. Yeah, this actually is a better revenue to price ratio. I wonder, I didn't dig into these numbers and see like how are we getting something better on this one? How are we getting slightly better returns? 3% growth rate, 2% growth, 3.5% growth, 3, 2, 3.5. I wonder if it has to do with the, let's open this analysis tab too. I should have done this ahead of time, but you guys can probably tell I just have not had the time to really dig into these as much recently as I'd like to, and I'm trying to get these videos out before they sell out. So just trying to see where things are. Okay, property taxes 10,800 on this one. Property taxes 9,536. I mean, that seems like that's in the same proportion. Homeowners insurance. Oh, was there a HOA on one and not the other? Nope. Miscellaneous costs 10% different. I mean, this is, it's $600 different, and we're not 10% cheaper, so that's something. I mean, property management should be just a percentage. Homeowners insurance, we have a much higher estimate on this one. I wonder why that is. That's pretty curious. Anyway, so there's some little bit of variation in those two numbers. It's tough to know, are they just being a little more aggressive in their projections? I don't think they would do that with homeowners insurance. Of course, I don't know. That's something, if you have questions, they are good about answering them quickly. They did that poll the other night on their webinar of, would you rather have 2 calls or 1 longer call for their webinar? And I couldn't believe everybody was like, oh, let's just do 1 call. I'd love it if we could, ask them, have a webinar with them, ask questions twice a month. Because, every single time they put out properties, I think lots of us have questions, and instead of us all just emailing them, it would be awesome if we could do those a little bit more regularly and ask those. But anyway, I think you guys all made the wrong decision when you said once a month, 1 longer one. I just like telling people they're wrong, right? You know that. So let's see. The neighborhood it's pretty sparse, so there's not a whole lot to, make a judgment on. And like I said, I mean, that was built in 1984 with an effective build date, which I don't even know what that means, of 1986. But it's not, it doesn't seem like it's going to be built out anytime soon. Not a whole. I actually prefer, being in the neighborhood. But I'm sure there are some tenants who just really want to be in this open space. But I never like to not know what's going to happen with my neighbor, right? Like, especially where we have some commercial right over here. I don't want a commercial property being built next to us. You could look up the zoning and see, is that something that's going to happen, or right behind. I mean, this is another commercial property here. I'd always prefer to be in a residential neighborhood if I have a long-term rental. Not a huge impact, and of course, we're looking forward into the future, right? Somebody would have to come buy that lot and build something, or the current owner would have to. Let's see, I already looked at that and looked at that. So let me close those. It's going to be pretty quick. Zillow was kind of weird. It just found 1 apartment at this address. I don't know if maybe you could mess with the search and find something better. Obviously, if you multiply this by 4, it would come up with an amazing price, but that would just make no sense. Like, it's just basically valuing a 2-bedroom, 2-bath, 900 square foot home here, which is not what we're looking at. Realtor was better, but not fantastic. It says 479,000. And what are we buying this at? 602. So, it's not. It thinks we're paying way too much. But again, I just don't really believe these types of platforms do a good job when they're valuing multifamily versus, I think they do a really good job on single family homes, because the main driver of pricing on single family homes is just sold comps, dollars per square foot, where when you have multifamily rentals, they're still, they tend to be sold based on comps, but they also, a lot of times appraisers will look at your gross rent multiple, or they'll even do a full income approach to value, depending on how what it looks like people are usually doing in the marketplace. All that being said, Redfin did come up with a number that's even higher than what we've got. And if you remember, but I think one of the best indicators is just the fact that we're buying the other one nearby for $635. It's very close. It's a fourplex, and for fourplex comps, I think you can go a little bit further away. And if you also remember from the Buffett video, there was a sold comp that was very similar to the Buffett that sold for $675. And that was about a year ago, and prices have gone down over the last year. But overall, pricing doesn't seem very, very far off to me. I mean, if we're overpaying, it seems like a small amount, if at all. I mean, we honestly, we could be getting a deal. My assessment of the Buffett was, it seemed like we're actually getting it for, some discount to what I would expect it to sell for. Because again, even though home prices had gone down a certain percentage, according to Zillow, multifamilies don't always just mirror home prices exactly, right? Like, we've seen that in my market, where all the fourplexes are still crazy expensive, even though a lot of the homes have started to lower in price a little bit. Okay, so that's it about the valuation. I'm going to just close these up. That was just there. And then, sometimes I look at this. What is the county value it at? 545. It's not too far off, but a lot of times these assessed values are just, they're really. I don't put a lot of weight into assessed values, but because I had already pulled up this page, I figured I would just look at it. So am I going to buy a piece of this? No, I'm not. But it's not, if I hadn't just bought a piece of the Buffett, I might. One of the things, I'm buying bigger chunks on Mogul, and they're putting out properties really fast. And so right now I have 3 that I've purchased a chunk of that I don't have, that aren't up and running yet, haven't closed on it, haven't received my first dollar of rent yet. And so I'm just going to go slow. I'm going to, continue to be patient. I'll pick up ones when I really like them. But just because I don't buy something doesn't mean that you shouldn't. Especially if you missed the Buffett, this seems pretty similar. Just to recap, what's different about this one? It's a little bit smaller, so we're paying a little bit higher dollar per square foot. It is. It looks like the roof and the HVAC might be a little bit newer. You should check the Discord links that Ike, or the links that Ike put in the Discord to verify that. But I think that's what he was saying. There's no garage here. It's 2 duplexes versus a fourplex. So there's a little bit of pros and cons, right? I mean, I think this is just in this. There's a lot of vacant land around this one, where the other one is right in a subdivision. I don't remember the difference in age of the properties. Do we have? I don't even remember if they put that on this page anywhere. Of course, we can always just look this address up and see. I bet they do, and I don't know where to find it on this page. But if we just look in Zillow, we'll see it. Yeah, and they're built right around the same time, right? This was actually built in 1986, and the other one said 1984. So, I mean, very, very similar properties, very similar purchase price. Uh, I don't necessarily, if they were both available at the same time, I think I would lean towards the Buffett, because I do like garages. The more storage space you give tenants, the longer your average tenancy. Oh, I should have mentioned this too. And they put this in the email and in the listing. They have 4.5 years of their average, their tenant has been there on average 4.5 years. The other one was 5. I mean, those are really good numbers for long-term tenancies. For my property manager here in town, they track that over. I mean, they manage over 1,000 units, and the average tenancy in theirs is somewhere around 3 years. So if you're getting 4.5 or 5 years, I'm pretty happy with that, and that's it's a good indicator of that it's a property that people like to move into and stay for whatever reason. Maybe it's that current manager was doing a good job, but it doesn't seem like they had like below market rents or anything in that regard. So anyway, I think that there's no good reason for me not to buy a piece of this, other than I'm just trying to not buy a piece of every single one that comes up. I am still, all of these platforms I'm still experimenting on, and so I'm adding capital to them slowly. I do expect more and more platforms to pop up, and so over time, I'll start to put quite a bit more, across the board, I think. But, especially, and I still have to do my portfolio update video for Mogul. It's not performing amazingly well, but it's mostly being brought down by my short-term rentals. But just because I have some disappointing properties on there too, it has slowed me down overall, adding capital to the platform. Now I think that's really everything I want to say about it. If you're buying a piece of this, let me know in the comments or in the Discord and why'd you choose it. And if you're not, and if there were issues with it that I didn't come up with, please share those too. I mean, that's the whole reason I'm trying to do this channel and create the community is I think the more we can share due diligence, the better off we are, because with the speed of new properties launching across a bunch of different platforms, it's hard to keep up with all of it. I could end up just doing this all day, every day at some point, which then it feels like a job, even though I'm on the couch. So I don't want to do that. That's not going to happen. Anyway, until next time, I'm going to just keep making mistakes so that you don't have to.